In today's session of Market Movers, we are going to exploit the opportunities which the gold is presenting to us, as it increasingly looks like the gold is going past the levels of US dollar 2000 in coming sessions. Today it is hovering close to US dollar 1950, and after the ECB's monetary policy announcement, it has again gathered pace on the upside. So we will see the technical outlook for that as well. Moving back to the fundamental aspects, if you consider the trading context for the day's highlight has been, of course, the ECB's monetary policy announcement, in which the ECB has decided to leave the key interest rates unchanged. The deposit facility rate has been left unchanged at minus 0.5%, whereas the interest rate has been left unchanged at 0%, and the marginal lending rate now stands at 0.25%. And also there is no change in its PEPP program, the Pandemic Emergency Purchases Program, and there the prior uh, asset purchase envelope of 1.35 trillion euros is also left as it is, and now the ECB is expecting that facility to be utilized to the fullest extent. Also, the ECB has not really weighed in on the recent appreciation of the euro. Of course, it has said that it might have some negative impact on the inflation in euro area, but apart from that, it is not going to any kind of it is not going to exert any kind of pressure on the euro's freely moving exchange rate. We also got the initial jobless claims for the United States, and for the week ended 5th of September, the initial jobless claims have come at 884,000, and this is the second week where the initial jobless claims have now been below 1 million mark. So to that extent, this is a good figure, but it is higher than the expectation, and the expectations were of around 800,000, but now it is on the higher side. But still, it shows that the recovery is gaining pace in the United States, and to that extent, it's a positive news flow coming in from the US. Just in a while, we are also scheduled to get the WTI crude oil inventory data, and this is being keenly watched after yesterday's API inventory data, in which we saw substantial inventory addition. For the WTI crude oil inventory estimates, we have the possibility of crude oil inventory rising by around 1.5 million barrels. So we will see how this week's data unfolds. In prior week, we had the drawdown of almost 9.362 million barrels. So this is going to be sort of reversal from steep decline to some addition. Now let's shift our attention to the technical outlook, where we will cover the USD JPY first, and then we will move on to the DAX. Sorry, I think I forgot to change it here, but it is gold and then the DAX. So pardon me on that count. Let's start with the gold's technical outlook. This is the daily time frame chart, and here, as you can observe, the 1900 zone has been acting as a crucial support for the gold, and on three occasions we saw reversal happening closer to US dollar 1900 zone, and for last couple of sessions the gold has been hovering close to US dollar 1930 zone, and in today's session it is gathering pace, as I said, and now it increasingly looks like that this prior swing high is probable, and if today's gains solidify, and if we see today's day closing with substantial gains, then I think for next couple of sessions also this outlook will remain on the bullish side, and we might see in due course of time this US dollar 2000 level being crossed, and the gold might even march back towards its all-time high in coming weeks. So from that perspective, I think this is the opportune time where we should look for entry points from short to medium term perspective. Of course, our session is mostly concerned with short to medium term perspective. We don't really go for big swing trades, so we will stick to our mandate. And here, as the things stand, after this double bottom kind of formation, where we have found the support for gold around 1910 zone, and here this consolidation has also been kind of extensive, and on the lower side the gold is getting the buyer support, and on the upper side we have this central pivot point coming in around US dollar 1970 zone, so that is likely to prove immediate hurdle. But if we consider this regression curve, it is now again pointing to the higher side, so I think there is a strong possibility of gold moving past this crucial resistance zone in coming session. Of course, it might not do in a single day or in one go. It might also do, but even if it doesn't, I think the today's consolidation levels around 1950 can be used as crucial marker for deciding whether to go long or whether to go on the sidelines. And we will of course rely on the lower time frame charts also to figure out the possible stop losses and the entry point, and of course the target price. So here, if we simply take into consideration the price action so far, we had these identical swing highs being formed around US dollar 1940 zone, and then in today's session we saw that gold was able to sustain itself above these prior swing highs, and the base was looking like on the higher side of 1940 zone. And now that ECB's monetary policy decision has been announced, we have seen fresh buying in the gold, and I feel this 200 SMA area, which is there around US dollar 1946, is going to be of crucial importance for us. And as long as the price action is on the upper side of this 200 SMA, we can continue to look for buying opportunities anywhere close to it. And on the lower side, this 100 SMA zone can be utilized as our stop loss, and the levels just below that, anything around 1930 should be good enough for stop loss if we are going to get the entry closer to 1950. That will entail the risk of around US dollar 20 per ounce, and on the higher side, as is our target, we are targeting US dollar 2000 level. So from risk reward perspective, we have the risk reward ratio almost better than 1 is to 2. So even conservatively speaking, that's good enough for the technical trading opportunity which is presenting itself for us to exploit in the gold. Now moving on to the equity segment. Here also the DAX is showing promising signs of continuing on this bull run, and getting close to this 100% Fibonacci expansion of its prior rally. Just a couple of days back, we saw the DAX reversing after getting close to 13,500 level, and again it fell below 13,000 zone. But now, after this consolidation, the DAX has rebounded well, and for today's session, the DAX has been consolidating closer to 13,200, and now that ECB has decided to stand pat with the dovish outlook, I think the DAX bulls have all the reasons to believe in continued upside, and in that scenario we can expect the DAX to get past these 13,500 level in coming days, and getting close to the all-time highs. And if that is going to happen, I think we should stand ready to exploit this situation to our advantage. And to that extent, we have to see what are the optimum entry and exit point for us to exploit in today's session. If we consider this price action, here we got double bottom kind of formation around 12,900 levels, and then this turnaround has been pretty swift. And even in today's session, the DAX has been holding to yesterday's gain. So we didn't really see much correction happening in today's session. The range has been fairly narrow, but I feel on the higher side there is this immediate hurdle, the resistance, first resistance of this must pivot point series, but it is not likely to prove a big hurdle for the DAX to cross above, as we have already seen that on the prior occasion the DAX did fail, and eventually it fell back to the central pivot point of the dismal pivot point series. But now this is the second occasion, and though we might see DAX struggling after getting close to this resistance zone, but I am expecting it to cross after maybe some consolidation and then get close to the second resistance, which is kind of far away. So we will not really go into the details of the second resistance, but I am approaching the DAX trade with the possibility of DAX moving past this immediate resistance and continuing to move higher. So if that is the case, I think the confluence zone of 50, 100 and 200 SMAs, which is there around 13,000, can be utilized for our advantage. Of course, we have the price action which is almost more than 1 percentage point away from this confluence zone. So we have to be careful also, but from technically speaking, from technical perspective, we have this formation where we have this double bottom kind of formation, and now fresh swing high also has been formed, and even this prior swing low was the lower sorry higher low. So we have this formation of higher highs and higher low, which also bodes well if we are going to look for the fresh trading opportunities in the DAX, and then the price action after the ECB's monetary policy announcement and Ms. Lagarde's press conference has been also pointing to the continuation of the bullish trajectory in the DAX. So we can hope for these sentiments to prevail in next couple of sessions also. And if that is going to be the case, I think any entry point closer to the 50 SMA zone can be considered for fresh opportunities, but right now that is also far away. So now that we have already seen big moves in the DX, maybe you can try for even the current market prices or just little lower than that, but you should keep the lot size lot lower, as the risk is kind of on the higher side, as we will have to keep the stop losses pretty wide, and I don't think that's a good idea. Maybe we should wait for a day or two, and as soon as the price action will cool off to some extent, and if it is closer to the 50 SMA zone while maintaining above the 200 and 100 SMA, then I think at that point in time we can think about going with a lot more lot size or lot more quantity. But even in today's session, things are looking well, and as long as the immediate swing low of 13,200 is intact, I feel the DX intraday trend will also continue to support the bullish trades, and we can even expect the levels close to 13,400 to be reached in a day or two. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should also be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.